Jobless claims are out. They dropped to 206,000 from a slightly revised 233,000. So, that's down 27,000. That's a pretty big move. And if we look at import prices for the month of November, they were down at 1.6%. That is a bigger down number than we were expecting. And if we look at ex-petroleum, which probably is a pretty good idea, it turns to down 0.3, also much more than expected. We're looking for a number unchanged to down 1/10. Now, if we look at year over year, up 0.7. That's where we also are about half of expectations. Let's switch gears. Let's look at export prices. Down 0.9 year over year, up 1.8. That follows 3.1. So, there's a lot of movement going on here, but none of it, in my opinion, is going to build the case that we need to have more fury with regard to tightenings with respect to interest rates. But maybe the new discussion ongoing has to be how quantitative tightening or balance sheet reduction and tightening or raising rates combined together is a dynamic that we really don't have much history on with respect to how it'll proceed through the marketplace and its reverberations. Yields, as you pointed out, Joe, at 290. Let's keep in mind, the bottoming process of equities obviously is going to take a while. Many, like myself, don't believe it's the big one. However, interest rates on the long end really have stabilized from the intraday lows, many sessions in the row in the low 280s. I think that is something very important to pay attention to. Andrew, back to you.
Okay, Rick, thank you for that. In the meantime, I want to get over to Steve Liesman, who has been looking at these numbers, but also maybe you can tie it into a little bit of the All-America survey.
Well, I mean, the survey which showed the decline in confidence, Andrew, might have picked up that rise in claims, but now it's back down. It could be a seasonal effect. We'll have to watch it. The 4-week moving average did tick up. Where is that? It ticked down from a revised up 228 down to 224. There is an increase. It's not worrisome yet. Most economists say look for that 250 mark to try to before you see any impact on the overall employment picture.
Andrew's saying All-America now, Steve. I don't know whether you heard that. I've got him saying the All-America survey instead of the All-American survey.
And still people are writing in, Joe, who want me to explain the joke.
First team or second team? That's what people are asking me.
That's one of the things they're asking.
And how does the University of Michigan survey play into this? The Wolverines, how are they?
Exactly.
All right, go ahead.
I do want to say very quickly, this import price decline is more than expected, and we continue to watch the import price channel for the place where you might see a tariff effect, but we're not seeing it. I guess you could argue a counterfactual, which is that they would be down more if not for it, but you're not seeing it there. When you take out the petroleum price decline, you're down 0.3. That's a reversal of the gain in October. Anyway, a lot of volatility here. Food, feed, and drink down 2.2%. After rising 2.2 in October. Capital goods down, motor vehicle unchanged, consumer goods. Maybe there's some way. I have to admit, folks, that I've never had to cover a tariff situation like this, a broad tariff, to know where to look for it. But somebody is eating these costs. Maybe it's Chinese and or other foreign manufacturers. Maybe it's the importers, but they're not showing up here in the import price channel at the moment.